What are the tea leaves that you're reading here, James?
Yeah, so I mean, we've had these filings to spot Ethereum ETFs for months, since the fall even, and nothing over the last couple months signified to us that there was any sort of approval. If you talk to these issuers, exchanges, you name it, no one thought it was going to happen. And then we started hearing from different people yesterday that the SEC reached out with comments and requesting immediate, basically responses and updates to filings. The deadline for this was Thursday. It's May 23rd. And the SEC was basically silent, not interacting with anyone on these topics until yesterday, which tells us this was a huge change as far as I'm concerned. So basically, the SEC decided as of Monday, when they reached out to issuers, we don't know exactly when it started, maybe late morning, early afternoon, who knows. But the SEC basically started saying, "All right, we're likely gonna approve these things," and basically took the approval odds out of the abyss as far as we were concerned.
And therefore, you've moved your spot Ether ETF likelihood probability to 75% from just 25%. Is this usual? Is this typical to have a sudden resurgence in the drama, shall we call it?
No, honestly, we were thinking about lowering our odds last week. But we were basically we only went to 90% for the spot Bitcoin ETFs, even though everything was pointing that it was going to get approved. But the one we left that 10% because we heard rumblings that the Biden White House was considering stepping in to stop the approval of spot Bitcoin ETFs, which just sounds a little bit crazy on its face. But honestly, it seems like the exact opposite might have happened here. It seems like the SEC was likely planning to approve. There might even be denial letters drafted up. And it might be the Biden admin, for political reasons, that came in and basically said, you need to approve these things. We don't want to be too anti-crypto.
Interesting perspective coming from you, James. I'm interested, therefore, what it actually means in terms of institutional demand. What we saw was, with the Bitcoin ETF, a whole host of new ETFs were launched, and suddenly a whole wave of money came in. Is the same thing going to happen for smart contract focus?
Yeah, so I do think that there is going to be a wave of Ethereum ETFs that launch. We don't know exact timing because this hasn't been planned out. The Bitcoin ETF was planned out for months in advance. There's a whole bunch of other filings besides this 19B4 approval that we're now expecting this week. There needs to be approval on the S1s or prospectuses as well. So we do think there's going to be significant demand for these things, but it will be probably some fraction of the Bitcoin ETF demand. So if you look at the market cap of Bitcoin, Ethereum is about a third of that market cap. Also, these ETFs, they're not going to be allowed to stake, which is like there's native yield in using Ethereum. So if these ETFs cannot stake, that should probably likely diminish some of the demand. So if you take the demand in the native crypto market and say it's about 30% of Bitcoin and then discount that a little bit, I think there will be demand. So 20, maybe 25% of the demand for Bitcoin ETFs over the long term, or at least the near term after launch, if you're comparing them to Bitcoin. But that's still billions of dollars. I mean, we have $13 billion of inflows to spot Bitcoin ETFs in just 4 months. So even if we get 25% of that, that's still a pretty significant chunk of change coming into new ETFs that are potentially going to launch in the coming weeks and months.